Are we good? Just want to make sure that the volume is good. Testing, testing. Testing this morning, testing. Can you guys hear me? The mic should be on. Okay, great. Does the screen look blurry? I had to update the OBS software. A back and forth, and it was a pain. Does it look okay, the screen? Because when I'm looking at it, it looks like crap on my little picture-in-picture. Does it look okay? Okay, we're good. All right, good morning, everybody. Let's talk about it. Happy Tuesday. It is September 14, 2021. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Let's go ahead and talk about the market. Dow Futures are up 114 points. NASDAQ Futures up 53. S&P Futures up 14. Russell 2000 Futures up 10. Crude oil is up 0.88%. Gold futures are up 0.29%, $17.99 an ounce. Oil is at $71 a barrel. Watch oil. Silver up 0.06%, not much. The dollar index is down 0.37%, 92.33. The VIX is down 3.41% at 1871. Ethereum futures are up 3%. Bitcoin futures are up as well, 3.78%. Euro dollar is up 32 pips, 118.43. And the US dollar yen is down 16 pips, 109.85 for my Forex people. Okay, so let's talk about the actual news this morning. This morning we had our CPI data, which is a consumer price index. That came in less hot than expected. So let's go over the number, excuse me. The number CPI month over month, August 0.3% increase versus a 0.4% increase. Previous increase was 0.5%. It's US CPI, this is excluding food and energy. It's up 0.1% month over month versus 0.3% gain. And previous 0.3% gain. So there you go. This is the first weaker than expected headline CPI number since last October. Keep that in mind. So definitely unexpected the market because you see the market cheering the weaker than expected inflation. Inflation expected to fall for the first time since May 2020. And you could see it looks like we may have hit a peak in April 2021. We're now in September 2021. This is the net percentage expecting higher global CPI, remember consumer price index globally. Here's some of the price increases year over year CPI report. Medical care service up 1%, shelter up 2.8%, food at home up 3%, apparel up 4.2%, transportation up 4.6%, food away from home 4.7%, electricity costs are up 5.2%, overall CPI up 5.3%. Here's where it gets really, where it starts skewing things. This is why you have a core CPI, and this is why you have a regular CPI, because automobiles tend to move this stuff. New car prices are up 7.6% over last year. Gas utilities up 21% over last year. Used cars are up almost 32% over last year, and gasoline prices are up nearly 43% over last year. So again, there is inflation. No one said there isn't inflation, but the question is now, is it as bad as people expected or people have feared? So there you go. And again, it came in cooler than expected. It's up year over year 4% versus 4.2%. So the market is cheering here. But looking at it here, let's go ahead and bring up some of the charts, and then we'll go over some pre-market movers. I am short a SPY this week. I am short Qs this week, just to give you a heads up, a disclaimer. So we hit as low as right here, right around 441 here, and we broke the trend twice. So we went ahead and shorted. As well here, we did start moving sideways for a bit, and then we broke up to the upside with the CPI data. The question is, does it hold? My guess is, it does not. So you can see I have one top here on this channel, but really you can also add another channel resistance here, which is actually pretty interesting because you could see if it breaks above there, you can actually make this line right around here, which is the 100-day moving average. So really your resistance is the 100-day moving average. Could it break? Sure, but then 4,500 is coming. My guess is that we could tap this in the morning, then reverse back down as we get closer to OPEX day. Keep in mind, Thursday we have retail sales numbers, which is a really, really big number on Thursday. So let's see what we get there. Again, the CPI number is nice to cheer if you're an investor, obviously, or if you're a call buyer, sure. But the question is, does this hold? Keep in mind, the last 2 days we had a nice green day in futures, and then it reversed first thing in the morning. We had that yesterday morning as well. Look at this, right at the open, we dumped, and then right at the end of the day, shorts closed their positions, and you can see that we're kind of holding in a range here. So again, nothing has really changed in that perspective. If we bring up NQ, which is NASDAQ futures, you could see that if we bring this sell up or actually expand, you can see this downtrend still hitting. But again, we're above the 50 here. Your 100-day moving average would be your resistance. Let's see if that can hold. Again, that is your resistance right there. You could place an alert as well. If it does break above that, then shorts may be invalid on any kind of NASDAQ puts. But for the most part, again, we also have the Apple conference today at 1 p.m. for the Apple iPhones, the unveiling. I don't know if it's going to be the iPhone 13 or whatever they're going to call it, but it's usually a sell the news event. So Apple usually falls. The last 2 years it's happened, we usually fall. We still have a big time resistance here on the 200-day moving average of 152.28. So even though I'm still holding shorts, I'm still confident in these shorts because of the fact that we still have OPEX day coming up. If we bring up the daily on S&P futures, you can see that the 50-day moving average has not been tested. That's still the level I'm looking to be tested. So again, right around 442, 443, or 44.30 or so, we got as low as around 44.33. But again, I expect that to tap, worst case scenario, and then bounce moving forward, just like we've had the last 4 OPEX sessions, 1, 2, 3, and 4. So again, it really is all about trends. It's all about, playing the probabilities. No one could really predict the CPI number being as weaker than expected as coming in, as we knew inflation was still running a little bit hot. But again, it's not about the number, it's about the market's reaction. So again, we have to see when the liquidity comes in about 15 minutes and see what we get from there. Let's take a look at some pre-market movers. As we do that, let's see, anything, Lucid Group is down 3.94%, Open Doors down 4.67%, Small Direct Club is up 5.69% pre-market. On the Dow, Apple is up ahead of their iPhone announcement, up 0.57%. Chevron and Energy are still up 0.70%. United Health up 0.24%. They had a great day yesterday. Boeing is up 0.48%. Microsoft up about 0.5% today. On the S&P, Wynn Resorts is down 8.19%. I'd have to read the news and see what's happening there. I didn't see anything. And on the NASDAQ, DocuSign is up 0.20%. Nvidia is up 0.36%. Tesla's actually red this morning. So that's where we are. But really the main thing today was the CPI number. Okay, good morning. Good morning. You guys could see, let's see, good. Jamie's asking about Amazon. Let's go ahead and answer that question for her. Jamie could be a male or a female name. Let me go ahead and expand this chart for you. God, I really hope that it's just my screen that looks that bad. Right now you're seeing a 50-day and a 100-day cross, which is usually a bearish signal on a stock. If the 50-day does break below the 100, that is a bearish signal. 34.88 is your resistance right at the 100-day. Keep in mind. Okay, screen looks good. Perfect. Turnaround Tuesday. Well, that's the expectation with a weaker than expected CPI number. The question is, does it have follow through in the market? That's the main thing. Please give me a recommendation for BA. I own BA long term. Love the company. But again, we still need a lot to get out of here. So 218 seems to be your first resistance. Let's go ahead and place it around 218.20. If that does break, then I would definitely like to go 222 calls. If not, maybe 220s or anything below 222 would be a good level. 222.50 around or so is your next level of resistance. So 218, then 222 is your next level for Boeing. Any free signals today, boss? No, not today. Right now, again, market's not looking, it's kind of looking wishy-washy. Yeah, we're getting a bounce, but again, there's nothing really breaking out either. Good morning, Carlos. What do you think about Tesla and Facebook? Love Tesla long-term, love Facebook long-term, obviously. But we're looking for trading. Tesla still needs to break 765. And for a put or to go down is 722.72. That's what you need. On Facebook, 384.33 for the upside, and for downside, you need 372.93, 373, let's call it, for a break to the downside. On Facebook, we can place an alert together. Let's see here below. And do I see an Apple dip today? I do, just for the fact that every time they report a new phone, it's a sell the news event. You're seeing that it's starting to move here, but again, it's just a consolidation from Friday at the middle of the day till today. So nothing has really changed. Really, the level you want to see to break is 148.64. That's your support level. And again, I have no problem with Apple coming down because I would definitely love to buy more right around 142. So as an investor, of course, you want cheaper prices, right? That's usually the deal. How does CPI affect us? CPI is basically the consumer price, what you pay for goods and services. Simple as that. Producer price index is what a producer or a company pays for to create the goods and services, whether it's labor costs, whether it's material costs, raw material costs, commodity costs, machine costs, et cetera, et cetera. But CPI is what you pay for a hot dog, a hamburger, a car, a shirt, whatever. Jewelry is an example. Also bullish flag, looking at Nvidia. Let's take a look at it. Oops. Well, Nvidia, it's pretty much a sideways action here. But if you're looking really short term, I guess I could see where your flag is going. But again, we still broke below. Look at the 50-day, the yellow line. It's still below the 100-day and the 200-day. And not only that, but the 100-day is about to break below the 200-day. That's another bearish signal. So Nvidia is not looking amazing on a technical moving average spectrum. But again, could it bounce? Absolutely. But a break of 220 would tell us a lot. And if that does happen, maybe a 215 put could be in order. But again, this is just short term. I'm still bullish in the market. But again, seasonality-wise, September and October are generally weak, especially ahead of OPEX. So again, just be, the saying goes, trust but verify always, right? That's kind of the deal. You want to make sure you trust the process, that you expect stocks to go up for the rest of the year in 2021, as I do. But again, you want to verify that these short-term speed bumps that we might be getting today, the next couple of weeks, again, just speed bumps. That's all. Raytheon. Let's see. I forgot the actual ticker for Raytheon. So let me make sure I have it. RTX, that's right. RTX. Oops. There's RTX here. Pretty much a downtrend like most of these big names, obviously due to last week. 83.79 tends to be the 100-day moving average or resistance, but really your resistance is 84.48. You're more likely not trading this name. You're more likely just owning it. I think it's great to own. If you're looking to buy the dip, $79.59, $80 seems about right. Are you still holding Q puts for this Friday? Yes, I'm holding all puts for, well, only two, but yes, I'm holding those for Friday. Well, whenever we get our profit target, but yes, I am holding. And Microsoft, let's see, where is that? I had that. Hold on a second. Microsoft was a pre-market. Let's take a look at it. Microsoft is looking like it's testing the 100-day moving average. 332 cents is the 200-day. But again, you can see the moving averages have broken down. Does it mean that it cannot bounce? No, doesn't mean it cannot bounce. But you're seeing right now, it is just holding that 100-day. Let's see what Microsoft does, but a break of around 301 could be something. But until then, I would wait. And which sectors are most attractive to you currently? Really, the most attractive stocks right now, currently, number one is a big cap tech. Mega cap tech, they're the ones that make the most money. Number two is energy. Energy is very interesting. I do expect that oil prices continue to go up. So that'd be the number two on my list. And could you take a look at the FIGS chart? FIGS chart, add an existing position. Let's see. Figs.com, I've never heard of them. So again, I'm just gonna look technically, look at the chart and see what's up. Pretty much just sideways action on the daily. It's at 41.40 now. If you want to buy around $40, I think that's pretty prudent. Not a bad idea. If we bring up, let's say a 3-year chart, not much either. So I would say around 40, you could probably buy some more, sure, if you really like the company. And AMD, let's take a look at it. You guys are rocking and rolling this morning. AMD, again, not as sexy, short-term wise, but again, there's a lot to move up. So we got some obviously some room for the upside, but right around 101 is your downside. I'm waiting for $99 to break. If $99 breaks, I'm buying some more shares. And right now, it looks like it's testing the 50-day moving average, your yellow line, right around 105.53, but nothing has happened. Really, if that does break, 107 could be in play. I don't think AMD's chart is great to buy here at all. So it's not a good one if you're looking for calls. If anything, you're looking for a break of what, around 101 to 99 for puts. And say thanks. Yeah, you're welcome. Thank you, boss. You're welcome. And can you take a look? Let me see. I'm making sure I'm missing anything. AMD, I answered Carmen. Good. And SDC. There's a Smile Direct Club. They are up pre-market. Yes. Smile Direct Club is up pre-market. It is a volatile name. We know that this is the braces that come in by mail or by delivery. Again, it is breaking out on the 1 hour chart. Don't get me wrong. But on the daily chart, it looks pretty ugly. Now, if you're looking for, possibly a dip buy, this is an opportunity to do so. You do have a gap to fill right around 666. That's probably your resistance here coming up. So again, I don't know why it's boosted. I have to read the news on it. I didn't see any news on it, but let's see if it does. If you want to own it, maybe you're a consumer that takes their braces and you like the company very much, then here's a good level to buy, and you could target the recent highs, which is right around $16.08. But until then, I don't like it personally. I would not put my money in it. And ATER, let's see it. Atarian.com, they are down pre-market. I don't know much about this company. On the daily chart, looks like it rejected the 200-day. Again, if you're looking to possibly dip buy here, if you're in an existing position, I can see where you may want to add here. If you're a type of person that bought really at the lows, if this is a place you probably want to sell, that's up to you because it's right at the 200-day. Again, it's a tough one because you could see that pump from February and down. I had no idea what this company does. You're welcome, Roy. Let's see, NIO. I know I'm running a little late, so I'm trying to give some more time for you guys. NIO, I love long-term. It's my second favorite Chinese company that I own other than Alibaba. Again, ups and downs with NIO, but again, I still believe that electric cars are the future, just like Tesla and NIO. So 38.39 is current where the price is. 36.46 is your next support. My level to buy is $30. I still love it long term, but to trade here, there's really not much, and Chinese companies have been taking a hit after hit after hit. I'd wait on the sidelines for these names for like Baba, JD, and NIO before we do anything. Playboy is trading under the 50-day and 100-day moving average. Like most of them, they are. Most of the companies that are. But you could see, yep, starting to tap that support around 23.50, 24-ish. It's starting to hold that right there. It is up pre-market. If you like Playboy, you could buy it here. If I look at the daily, if you like it here, you could buy it here. If you really want to dip buy, I would say wait for 20 if that's what you want. But I don't know what Playboy, other than their magazines, what they really do. So I don't know if it's a fundamental play for you long term or it's just a trade. So I would wait for 20 if anything, and it could possibly go down there. All right, guys, we'll leave it there. I got to catch in with my live trading people, and we'll catch you guys tomorrow for a morning note. Have a great rest of your day. GARCapitalFX.com. Make sure to hit subscribe, like our videos, comment, and turn on notifications as always. Appreciate you. We'll catch you guys tomorrow.